In business today, three things to know. First, Russian bankers panic as its currency collapses and interest rates skyrocket.
Dmitry, there's no point in you getting hysterical at a moment like this.
But why there may be a good reason to be hysterical. Then, look who's in charge, how the Saudis are shaking up the political world over falling oil prices. And no hooray for Hollywood this Christmas. What is behind the movie industry laying a financial egg? The Rise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. For the markets, the story is about the fall in oil. For Russia, the story is the collapse of the ruble, thanks to the fall in oil. And for Saudi Arabia, the story is how the sheikhs may be managing the fall in oil by turning it into a political weapon. Let's start with the markets, which continue to struggle today. Here's a look at the final numbers. The Dow finished down nearly 100 points to 17,068.87. The S&P 500 off by triple digits, almost a full percentage point to 1972. And the NASDAQ falling a point, 1.25 points to 45.47% points. The top stocks we're watching today. Boeing has raised its share buyback program to $12 billion due to strong operating performance. The aerospace manufacturer also raising its quarterly dividend by 25%. Boeing closing up to 22. And Radio Shack has appointed a new interim chief financial officer, their third in a year. Not much job security in that job. They're trying to help the store stay afloat amid dismal sales. The appointment makes Radio Shack's third CFO just this year. Radio Shack down a nickel to 34 cents. Shares of drugstore chain CVS soaring after the company announced a new share buyback program and issued EPS growth for next year. CVS closing up to 46. Taking a look at commodities, gold up, or rather down 11 points. Oil finishing the day up 7 cents. It was up and down all day. And by the way, when you think about it, oil is now less expensive than a bottled water. Some economic data out today. The Commerce Department says housing starts and permits dipped 1.6% in November, but still pointed to a stronger housing market. And factory activity continued to expand in December, but grew at the slowest rate in 11 months. Russian central bankers stunned the markets overnight by raising interest rates to 17% in an attempt to stop a rout of the ruble. It did not work. The Russian currency is now down 50% against the U.S. dollar in the past year. The Russian economy appears to be following the ruble down the drain. Why should the world care? Zane Brown is fixed income strategist and partner at Al-Ahmed, who is here to discuss that. And we're going to talk about what the central bankers here plan to do this week. Zane, if we woke up to a 6.5% interest rate hike by the Fed, there would be blood on the streets. What drove this?
It would be more than blood. People would just not understand. And a lot of that thought process went through international markets today. I've been in this business more than 30 years, and I can never remember a movement of this magnitude, followed by a near panic even after that type of movement. So I think that, this really has still more legs. It still has more room to run.
Yeah, they did this in the dark of night at 1 in the morning. What were they seeing that caused them to literally pull the parachute?
Well, as you pointed out, we've got the value of the ruble half of what it was at the beginning of the year. That increases the costs of imports. It really makes it very difficult for anybody to even live in Russia. It's very difficult for that economy to continue to survive in this environment. They had to do something to support the ruble. And even with this kind of outlandish move, it appears not to be successful.
Why did it not work? Why the flight away when you have such high interest rates?
Well, I think people looked at it, saw that it wasn't working, and said, what's next? The only thing that they can do after this is capital controls. Let me get my money out of here. Let me go someplace else where it's got to be safer.
Which is to prevent money from leaving the country.
That's right. Just control it and not allow people to convert their currency.
Terrify investors.
Absolutely. Not only terrify investors in Russia, but terrify investors in other emerging market countries that may be in a similar situation where they're dependent on exporting energy or something like that.
We did see some falling currency in emerging markets today. Sort of a
yes.
follow through on that. Let's talk about what's driving that. First, oil. How big is the oil economy to Russia?
Oil is everything to Russia. That is their primary export. They thrive, they live, they survive, and now They're not even doing that because of the price of oil.
And sanctions clearly starting to impact Russia as well. There's a story about how there's a run on cheese because we banned cheese.
Well, sanctions certainly helped out, but I think the driver really is oil. And now, as you pointed out in your introduction, the driver is currency.
From an economic standpoint, not a political one, what impact does how Russia affect the rest of Europe?
Well, Russia still has to pump as much oil, export as much oil as it can. So I think from an economic standpoint, they need revenue. And even if it costs them something in profitability, they still have to export. They will export. This actually benefits Europe that imports Russian oil.
Okay, let me ask you about the central bankers here, which have problems, but far less problems than they do in Russia. They started their two-day meeting today. What are they going to say tomorrow?
Well, they're probably going to change this considerable time language, indicating that they're likely to move mid-year next year and start a return to more normal rates. In the United States, we have a completely different situation where we are pretty much immune from what's going on in the rest of the world, and we end up with a benefit of lower oil, which should help our economy, the benefit of a stronger currency, and that combination with job growth and with lending growth really signals the Fed that the economy is strong enough it can withstand an increase in rates.
And how quickly the tables turn maybe between when Russian President Vladimir Putin looked so strong over the summer and now he may be in trouble.
Well, it looks to us like he may be in trouble. He does have a way of endearing himself to his population. Oftentimes it's by blaming others for their faults.
Zane Brown, thank you so much. See you soon.
Good to be here.
Coming up, Saudis in charge. What signal they're sending about oil? You're watching Rise Exchange.
If I was building my own network, it would be for the people, by the people. It would be very diverse. It would be with every culture you can think of.
If I was to start my own news network, it would reflect positive and negative within the continents and the countries around the world.
I think that I would be more looking towards young people.
If I were to build my own news network, it would look like New York City. Old, young, fresh, hip, classic.
If I was to build my own news network, I would just have people from all over who are very connected and diverse.
If I was to build my own news network, my own world network, I would love a correspondent in every country, every location, every city. I mean, it's kind of unrealistic, but how cool would it be to get local stories from the impoverished country, the impoverished city that we don't know about?
Arise News, every culture, every angle.
Welcome back to Rise Exchange. When OPEC recently met, the cartel refused to defend the price of oil. And since then, as we have reported, it has continued to slide. It is reported that Saudi Arabia pushed for letting prices to fall, even as other OPEC countries objected. Now, while competing with U.S. shale production is one reason, the Saudis may have others, including some political payback. Al-Ahmed is director at the Gulf Institute and joins us now from Washington, D.C. to talk about exactly what Saudi Arabia's game plan here. So let's start with that. What is Saudi Arabia hoping to accomplish by keeping oil prices down?
I think it's targeted, number one, at Iran, because Iran now is producing less oil and because of sanctions. So if the price goes down by 50% like it's doing right now, or even more, Iran will be in a tougher economic situation. The same applies to Russia, which I think the Saudis found it a way to convince the Americans that's the way to go to hurt the Russians, and the Russians are pretty clear that they are hurting pretty badly in combination with the Western sanctions on Russia on the regard, because of Ukraine. Also, in the economic side, the Saudis are making this rational, which is, I think, very strategic. If they are able to basically destroy the shale oil and gas fracking industry, they will assure that they will have longer, they will sit at the top, the oil business for longer. Because if shale oil and the gas fracking takes hold in the United States and other countries, it means that Saudi Arabia will lose its it will lose the throne of being the oil powerhouse that it had over 30 years.
So there's so they're basically playing two games here. One is an economic one, right? Competition.
Yes.
But let me ask you about the political one for a moment. What is their stake with Russia? From what I understand, they're not particularly happy with the Syrian regime. And you say they're trying to curry favor with the United States because possibly to divert attention away from other Saudi activities?
Absolutely. It's not really the target here is not Russia. We have written, for example, a paper on this, saying that the Saudi government, Russia is very involved in Syria. Absolutely, they support Bashar al-Assad, but so does China. China is also vetoed any UN Security Council decision on Syria. So the Saudis are not doing that to China or hurting China. This, in fact, is going to help the Chinese, their decision. So it's not really Russia per se. I think they are mostly concerned with siding with the Europeans and the Americans against Russia, and that what you describe as currying favor with the Russians, with the Americans and the Europeans. I think that's their biggest win here, or biggest gain.
Is there really a long-term gain here in being able to drive down our shale production? It seems like while we may take a short-term hit, it is going to be hard to kind of curtail U.S. production long-term.
I think so, but at the same time, if you look at the difference here, that the shale companies do not have the same deep pockets as the Saudis. The Saudis have run a lot of revenue in the past few years, and they have a lot of cash on hand. If you look at shale companies, they're investing a lot of money. They cannot survive. I know it will come back later, but if these companies who are losing basically their shares right now in the United States, it's very hard to come back from that. You need a lot of capital to start up again in terms of the shale industry, and the Canadians are also hurting. The Venezuelans, a lot of people, all the oil producers are hurting because of what the Saudis are doing, and that's why you see I really am amazed that the fact there is not an alliance that has emerged to oppose Saudi Arabia's policies, because across the globe, from the Indonesians to the British to the Dutch to the Venezuelans to the Canadians, are hurting because of this policy.
We're running out of time, but I do want to quickly ask you, do you think this is a shrewd move by Saudi Arabia? You think they're playing their cards correctly here?
I think they are a shrewd move for them. They are going to gain, to dominate the oil business, but also it's going to create a lot of problems inside the country because they are running a deficit of 50 billion, 25% of their annual budget. So they might have reserves to cover it, but they might also have problems. Kuwait today announced that they are going to lift any support from electricity or energy subsidies. So that's going to create social problems in both countries.
Al-Ahmed, thank you so much. Fascinating.
Thank you.
Time now for our business ticker stories making headlines across the nation and the world. Crime and corruption is sapping about $1 trillion a year from the world's poorest economies. According to a new report by the nonprofit Washington-based Global Financial Integrity Group, the outflow of illegal capital is the most damaging economic problem facing the world's developing and emerging countries, and is much more than the combined sum they are getting in aid. The report claims China is in the lead for illicit capital losses. Apple found not guilty in violating antitrust laws. A California jury threw out a long-running class action suit that sought $1 billion in damages. The suit claimed Apple prevented iPods, remember those, from playing songs not bought on iTunes, violating competition laws, and resulting in the company dominating the market and overcharging for iPods. And speaking of dominating the market, Apple Pay may soon have competition from Samsung. The Korean electronics company is reportedly working on its own mobile payment service for future smartphones and is said to be in talks with a company called Loop Pay, a startup based in Massachusetts. The service could launch sometime next year. It may seem crazy, but Korean Air is facing sanctions over nuts. According to South Korea's transport ministry, the airline pressured employees to lie during a government probe into the nut rage incident that went viral, you may remember. Earlier this month, the daughter of the airline's chairman, who was also head of cabin service, overruled the captain of a flight to force the plane back to the gate, all because she was served macadamia nuts in a bag instead of on a plate. The ministry will also evaluate if the airline's corporate culture poses any safety risks. And take a look at our tax dollars at work. A $350 million NASA tower completed in June in Gulfport, Mississippi, will go unused. Construction of the 30-story structure designed to test a new rocket engine actually continued for several years after the project was officially canceled. And get this, the finished yet unused test stand costs a whopping $700,000 a year to maintain. Maybe they could sell tickets to go visit it. You know, it's going to be a lot more expensive to serve up a holiday dinner this year. That's because the price of meat has hit record highs. Ground beef prices are up by more than 75% since 2009. And at one point this year, the price of pork rose nearly 70% higher than last year's prices. Here to make sense of it all is John Anderson, Deputy Chief Economist with the American Farm Bureau Federation. John, welcome back to Arise Exchange. Good to see you.
Good to see you. Thanks for having me.
You know, I'm kind of a little surprised that prices of meat are going up because we keep talking about oil prices going down, and you may not connect oil and food, but they are connected, aren't they?
Yeah, they're very much connected. Everything that you see in a grocery store came from somewhere else for the most part, and transportation is a big part of that bill. In addition, processing and packaging, those tend to be pretty energy-intensive things. So very close relationship between energy prices and meat prices, and really food prices in general.
Okay, so what is therefore driving beef and pork?
Well, it's got a lot more to do with where we are with the supply situation for those products. We've got lower production this year than we've had for the last several years for beef. Pork production also is a little lower than a lot of people expected this year. Certainly lower than we expected when we went into the year.
Is that intentional, by the way? I mean, did farmers make a decision not to raise more cattle?
Well, the tough thing with cattle is that the decisions that you make today really affect production 2 years from now, 3 years from now. And so during the drought in 2012, during the period of high feed prices related to that, we had a lot of farmers that made the decision either because they couldn't get feed or they thought feed was too expensive, they reduced their herds, and we're seeing a lot of those effects in the market right now.
Are Americans now eating less meat? Because for a while meat consumption was, I think, back up with various, sometimes there's diet fads that help drive that a little bit. Where are we historically with Americans eating both meat and pork?
Historically, if you look at total meat production, or at least of our major species, beef, pork, and chicken, per capita consumption peaked in 2004 and has been declining pretty much steadily since then. It looks like it's about to bottom out. And really the main thing behind that is just that production has been down. Production has been down and foreign demand has been strong. So we've produced a little less, we've sent more overseas, and that's left less on the U.S. market. But certainly consumer tastes and preferences, which include those sort of diet issues, are part of that.
I have read that hogs are too fat. Is that true? What impact does that have?
I really don't think that's true. Hogs are certainly big, but I wouldn't say they're fat because the number of hogs have been down. We've made up some of that decline in production by putting more weight on each hog, but that weight is for the most part additional lean meat product, not additional fat. Actually, hogs in the United States are very lean. You can talk to some people who say they're too lean. We need more fat in the meat to make it more flavorful. I like pork like it is. I don't think too fat hogs is a problem, but they certainly are bigger than they have been in the last couple of years.
If you're a farmer, have farmers diversified? Are there still farmers that basically, are in the cattle business, or are they diversified that they could sort of manage the variances of the market?
Farmers tend to be pretty sophisticated in terms of how they manage risk. They manage risk in a lot of ways. One of the ways they manage risk is with diversification. Certainly being in hogs and cattle, for instance, wouldn't be a great diversification strategy because those are pretty similar markets. But we do have a lot of farmers that are in the hog business and the corn business. They grow the corn, they feed it to their hogs. They have some options about how they can market either one of those products. And so we do see a lot of diversification.
Well, John, I was at a bar here, a new restaurant in New York called the Bacon Bar, which all they sell is pork products. And I will tell you, if that's any indication, New Yorkers are eating a lot of pork. Thank you so much.
Thank you.
Good to see you. Coming up, a New York teen learns a tough lesson in trading places and is our favorite person of the day. You're watching Arise Exchange.
There is a reason Africa is called the new frontier. What was once potential is now an opportunity ready to be seized. Once revered for our resources, today's wealth lies in our people. People who build the cities that shape the future. People who know an idea in one place means business in another. A generation for whom technology means there are no borders, no boundaries. We are the new lions in a brave new world, kings of the urban jungle. And there's a bank that puts the world in our pocket and the future in our hands. UBA, Africa's global bank.
The search continues for the more than 200 abducted schoolgirls.
Unquestionably, this is a Nigerian problem.
President Barack Obama stopped short of visiting the border. Why can't Washington get anything done when it comes to immigration reform?
But you got to come up with a solution to it, and no one has a real solution.
Does this further terrorize people, make them more afraid, or is this making people angry? Hello and welcome to Arise America. I'm Debbie Turner-Bell.
Time now for Liquid Lunch, things that make us want to drink. That would be a frat from the University of Pennsylvania, which probably wished it chose a different theme for its Christmas card. The members of the Phi Delta Theta fraternity posed for a picture with a black blow-up sex doll they called Beyonce. After the group posted the photo on Facebook, the NAACP called it racist. The fraternity brothers say they made a mistake and apologized. And that takes us to our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, it is a 17-year-old New Yorker who went from claiming he made $70 million in the stock market to admitting he made it all up. Mohammed Islam, a senior at New York's prestigious Stuyvesant High School, told New York Magazine that he made upwards of 8 figures by picking stocks. He even told the magazine about the apartment he owns and the cars he would drive if he had a license. The story quickly caught on, and the New York Post followed up with a profile of Islam and the headline, quote, "High school student scores 72 mil playing the stock market." Well, now the New York Observer says he made it all up. The teen admits to the paper that he not only did not make $72 million, but in fact, he never invested any money in the stock market. He's a little Bernie Madoff in the offering, isn't he? Islam says he does run a mock investment club at his school, but he has earned no money in the market. He says he came clean because his parents were horrified by the story and that right now they're not even speaking with him. Meantime, the reporter at New York Magazine is getting hammered for failing to properly check Islam's story, but also to do basic math. He would have had to post returns of 796% if he had started with $100,000. Unlikely for a kid from a working-class family from Queens. And so Mohammed Islam is our favorite person of the day. Next, why are the movie theaters nearly empty? You're watching Arise Exchange.
Fallout continues in Washington following Tuesday's scathing Senate Intelligence Committee report. Does this put Americans and America at risk?
Torture should have consequences. Torture is not a policy choice.
CIA managers and interrogators were uncomfortable with what they were being asked to do.
Widespread demonstrations are continuing for yet another night.
We are at a point of moral crisis. We are at a state of emergency for Black Americans here.
Hello and welcome to Arise America. I'm Debbie Turner-Bell.
Informative. The U.S. economy is on the right path, and the wizard of the Fed is leading the way.
We started our companies originally to create something that made a positive difference.
Compelling.
I became very successful, not allowing myself to be average.
Our favorite person of the day, when we pick one person who grabbed our attention and not for the right reason. Yeah, he sort of lost all business. Investors came back from the long weekend tanned, rested, and ready to buy stocks. Entertaining money daily. Arise Exchange. The holiday season for movies is typically when a lot of blockbusters are released and a big boom for the box office. But this year has far less than a smash hit for Hollywood. Younger folks, the most frequent moviegoers, are not going to the movies as often, according to Nielsen. 12 to 24-year-olds have gone just 7.1 times in 2014 compared to 8.4 times last year. The reason may be more young people are streaming movies and TV shows and the high cost of going to the movies. Brad Adgate, the director of research at Horizon Media, is back here on Arise Exchange. Brad, I went to see The Hunger Games this past weekend, and the movie was so simple and so terrible that I rooted for the Capitol to win, so we wouldn't have to go see the final installment. Is part of the problem here is the movies aren't any good?
Yeah, I think that coming in the studio thought this year might be a little bit of a lean year compared to a year ago. You know, it was the worst summer since really, when you account for inflation, since 1997.
Really interesting.
It was, you know, box office is still off 5% from the last couple of years. But next year, I think they think it'll be a little bit strong with, you know, the Star Wars Episode 7
gonna come out.
had 40 million people watch a trailer in 3 days. So that's going to bring a lot more franchise reboots, sequels.
And if you look at the movies out, like The Hunger Games, The Penguins of Madagascar, Exodus, Annie, one type of movie that's missing from this list seem to be horror movies. And when it comes to young kids, that's like crack for the industry. They just go back over and over again. Is that part of what we're seeing here?
Well,
Do you think a cyclical change in what the content is?
I think we're seeing a lot of cyclical things that, you know, for instance, this was a big year for Bibles. You know, you had Noah and of course you had Exodus. Which
we know
is
how it ends. The movie ends in Exodus, though. I mean,
Son of God.
They don't change the ending.
And then you have a lot of family. We're having 2 musicals, you know, Broadway musicals released within a week with Annie and Into the Woods. And of course, you have some family movies. So there is a lot of similar genres that are being released at the same time. And I think you're going to see the studios try and separate that a little bit next year.
Okay, so now the question, though, that has to be scary for Hollywood is this cyclical or is it secular? Meaning that we're starting to see a change in the way people view movies,
well,
like with streaming, like Netflix, et cetera.
Well, we're seeing the same thing in television. I mean, Nielsen says 18 to 34s are watching about 10% less television this year than they were a year ago. You're seeing this also with moviegoers, as Nielsen pointed out. So I do think that you know there is a change. I think the studio or the theaters are trying to change that. They're putting in luxury seats. They're serving gourmet food. They have a thing called 4D. Not that 3D was that great. But 4D has like if it's raining, you're going to get wet, and if it's an earthquake, your chairs are going to rock. And also
gimmicky though, right? At the end of the day, the movies have to be good. So do you look at this and you say it's content based, or do you say that the industry really has to change the way the movie experience is?
You know, I do think that it probably is content. You know, we live in an era of social media. You know, it's not just everybody can be a reviewer, you know, on Facebook or Twitter. And so, you know, if somebody likes a movie, you know, people are going to know it really quick. And you know, people don't like a movie like Exodus kind of got, you know, kind of like lukewarm reviews. And, you know, its opening was only 24 million.
I don't think Moses had a Welsh accent. I think that might have been part of the problem.
That could be. It was Noah.
It was Noah. You know, there's also a lot of sequels that are out, and that seems to suggest that if you didn't see the first one, you're not going to see the second one. And I'm wondering if that sort of plays a role here too.
I think so, but I think less. I mean, because you can always go back and see a show. You can get it on DVD, you can see it on VOD, you can see it on paid cable, you can see it on Netflix or Hulu or whatever. So there are opportunities to catch up and see the first episode or first in a series of shows. It's kind of like binge viewing.
Is there any evidence that the recent issues with Sony, for example, play a role? Do people boycott studios at all? I would think not. But,
no, I don't think so either. I think that, you know, we are endlessly fascinated with the lives of celebrities, and they're getting a lot of information that Sony is trying to stop about, you know, the emails and how people, you know, kind of act off camera. So, if anything, you know, it's more press for the movies.
And I would say that the movie industry, more than 100 years old, has been in these ruts before. And even when they're in these ruts, these movies make money, don't they?
Yeah, they do. I mean, it's interesting. You know, the biggest movie attendance year was 1947, and that was before television. And then television came in, and movies dropped, and you know they had to reinvent themselves. And now we're seeing the same, you know, with streaming video. And what is Hollywood going to do in response to, you know, if young viewers who are the heavy moviegoers are now staying home and having Netflix nights, you know, that are cheaper in a month than what you pay for one movie.
Okay, Brad, as always, thank you.
Thanks.
Tomorrow on Arise Exchange, we'll find out the results of the Fed's two-day meeting in Washington and whether or not interest rates are going to be raised or if they're going to change their comments on it. Also, we'd like to let you, our viewers, know that we are now streaming live on Facebook. Take a look at us at facebook.com/Rise TV News. Another look at the markets. Second straight down day for the markets. Dow down nearly 100 points. S&P 500, NASDAQ also in the red. Oil playing a big role in that. We will continue our series on oil tomorrow. I'm Andrew Schmertz. Thanks for watching Rise Exchange. See you tomorrow.